Hello everyone, welcome to a new episode of Investing Fool. The markets gave quite a bit of jolt to most investors today. Many of whom were probably desperately hoping for some sort of rebound. Naya week start ho raha hai, right? Monday, fresh eyes. But the reds that we saw on Friday, they just continued today, and there's global weakness around us, and Indian markets are especially weak, no end in sight. Our portfolio actually fell by like close to 5% today. This was the single biggest one day fall in from the time we started this portfolio, right? So we started this our core portfolio back in November 2023. So it's been a little more than a year, and the largest single day decline we saw today, 13th of Jan. So this day probably we are going to remember for some time. Assuming that tomorrow's falls is not like tomorrow it doesn't fall more than this, right? So I thought that I'll make this short video just to kind of share the pain, look at the portfolios, look at the stocks, some other portfolios as well. We'll take a look at the all caps portfolio as well, which is like taken from like all stocks listed on NSE. I've never like discussed this on these videos. I've discussed the topic, but I've not discussed the portfolio as such. But we'll take a look at that as well. And there are a few points. I'll try to keep this video under 10 minutes. So let's just get started. The disclaimer again, key no stocks are financial recommendations. So please do your own due diligence. So keep calm and bear losses. Continue to bear losses in this times. So as I said, worst single day fall in portfolio history. This is 5%. Although the history is just like 1 year, which is nothing in stock markets. And there is red everywhere. It's a sea of red. So you can take a look at the beautiful portfolio here. It's all red. There was one stock that actually kind of defied the odds, that is Piramal Pharma, up 5% today. But you can see the rest of the stocks, right? Everything is in red, and look at the kind of falls they're having, like Kalyan 8.5% here. You can see Policy Bazaar 9.4%. The pain is all around. Small cap, mid cap, large cap, whatever. The index fell by around 2.6%, and we fell by 5%, right? Almost 5%. The average loss for losers was also in the same ballpark. Overall, even pre-tax, we have actually now slid below the index. So you can see Nifty 500 has returned around 20.7% pre-tax in that same time period, and we have now slid below it 20.3%. So this has happened after quite a bit of time, and this is an especially painful and swift correction. So we'll discuss about that. So current drawdown of the portfolio stands at 19.4%. This is the max drawdown that we have ever seen. So we made a high somewhere around the beginning of October, and then we saw a small recovery after that, but we have just, I mean, the sentiment has gotten weaker and weaker, and we have been sliding quite a bit. So many of you may be in similar positions. Many of you, especially those who have like started in the last 6 months or something, the pain can be very huge. But it is important to remember that we need to see both sides of market as a regular investor, and if you are a momentum investor, then you need to see both sides of momentum as well, because it's very easy to get excited in the good times that say like buy anything and it just doubles in 3 months or whatever. And but you have to remember days like this when you are reminded what the market can do and how much it can, like 5% is a lot, right? A portfolio to fall by, although the broader indices are not falling by that much, but many portfolios would have fallen, and specifically high beta portfolios would have fallen quite a bit. But it's not that like as a factor momentum has fallen quite a bit today and others are not. The pain is all around. You can see it. Let's take a look at the all caps portfolio. The point here again, this is like a 40 stock portfolio that I have been tracking since November last year, which is like 1 year from when our original portfolio completed 1 year, right? So it's not to show the stock names or anything, but you can see the portfolio 1-day return, and this is still like something in the works, but the portfolio 1-day return is very close to what is there on our core portfolio as well. So it doesn't matter whether, because that portfolio has a lot of micro caps, things kind of even each other out. We have seen in the past couple of sessions small caps and mid caps are falling quite a bit compared to large caps, but it's not that the pain is not there in large caps. Like there is no safety, basically no sector. Look at the sectors here, right? So that was the third point on the slide, that look at the kind of falls that we are seeing here. Realty down 6.5% in 1 day, and this was a performing sector, right, for like in the recent few weeks. And you can see at a 3-month level, right, let's first take a look at the 1-month level, right? So 1 month, no sector is in positive, right? Every single sector is in red, everything is in negative. Look at 3 months. In 3 months, all sectors except IT are in red, right? So in 3 months, you can bet on whatever sector. You can like say okay, this sector is having momentum, stocks within this sector are having momentum. It doesn't matter. Like if the whole market is falling like this, then there is just no safety at all. So this time it is swift. So the falls have actually been compressed into a few sessions. Typically what we see is कि थोड़ा गिर जाता है, फिर थोड़ा consolidate होता है, maybe it doesn't go anywhere, then again like a false breakout happens, and again we slide down, or it slides down after that. But there is brief pauses जहाँ पे मतलब the consolidation is shaping, right? Here we are not getting the time at all for anything to shape, right? It's fall. Friday fall, Monday open, again fall. Every day you wake up, you see a new fall. So this is like kind of a difficult time, and it has been relentless, right? And it is broad based. Large cap mein raho, small cap mein raho, everything it's all falling around. So keep calm and bear losses, stay invested. And in the next rebalancing, we might get a lot of exits. So we can take a look at the portfolio now itself, right? You can see many stocks that are actually below the 25%. So this is our second exit criterion. As you see, like on the rebalancing day, if we find any stocks that has fallen more than 25% from its all-time high, we take it out, right? So you can see Trent is meeting that criterion right now. Zomato is meeting that criterion. Kalyan is fallen more than 25%. Jubilant Pharma 29%. Piramal Pharma almost 25%. This gain today has kind of saved it. Otherwise, it was also less than 25%. Deepak Fertilizer 25%. Policy Bazaar close to 25%. K Fintech at like 23%. So it's like there could be many exits this time if this fall continues, and we still have 2 days to go to the rebalancing. Fingers crossed, but I am not hoping any good things to happen in the market in the very immediate future. If there was some inkling to the market that something good is going to happen, then like it won't be so devastating, like the fall won't be so devastating, right? Okay, the next point is that reasons, again we have talked about this many times. Bond yields are going higher, like US Fed rates are not coming, our GDP is not performing. It doesn't matter, like it doesn't matter why the market is anticipating and market is falling. What matters is what you do when the market is falling, what you do to your stocks, to your portfolio. That is the only thing that matters, right? You can't control the reasons are uncontrollable. Even if you know what is what is leading to this fall, you can't time your presence in and out of the market, right? You may get it right sometimes, you may get it wrong sometimes. In the long term it won't matter. So what will matter in the long term is how you behave, how you stick to your strategy, how good your conviction is. Because in the very long run, markets will go ahead, the economy will perform, this will pass, and the market will make new highs. That's for sure, right? When it will be, like, we don't know. People have come out of 2008, right? So if you take you construct a momentum portfolio, you backtest it, you keep it, like you start it at the peak of 2008, right? And from there you have that massive fall. And even then, if you take a very long term, if you have the stomach for it, then you would be fairly okay. So that is one thing to remember, that people have come out of like crashes like 2008, and this is not even like even like a little bit compared to what it was at that point of time, right? We like I wasn't part of the market then. I wasn't investing in the market then. I was in school, but people who were there, they have seen much worse crashes, and this is really nothing in comparison. So we should set our sights on the long term only. One important point that I wanted to discuss, and before that, let's just take a look at the Nifty top 10. So Nifty top 10 was actually it had performed good on Friday because the IT stocks were up, right? TCS was up like 5% or something, and Nifty, because Nifty top 10, our core portfolio doesn't have a lot of IT stocks. It has 3 IT stocks, but they are not performing. But in Nifty top 10, these large cap ITs have recently come in, right? So HCL Tech, TechM, Wipro, Infi, right? So 4 of these stocks are there. TCS is not there, but they were kind of shoring up the portfolio. And but today you can see the kind of falls here also. Our core portfolio stock member trend has fallen the max here, but Mahindra and Mahindra 3%, Wipro 2.6%, Apollo Hospitals 2.6%. So there is some pain here as well, but overall because of the presence of IT, Nifty top 10 is like withering this fall a little bit better than a portfolio that does not have IT, because as I showed in the last 3 months, IT is the only sector that has that has been in the positive, right? Every other sector is in negative. Okay, so as I said, might get a lot of exits this time, but the more critical point is there could be a tweak to the strategy. So I we may not want. So typically what happens is, if the equity curve is below its 200 DMA and the Nifty 500 is below its 200 DMA, then we do not take any new entries, right? We just sell positions. If we sell positions and do not take any new entry, that essentially means we are taking cash, right? So we'll keep that invested in liquid case. However, I'm still thinking this out, but and this is difficult to backtest also, but the kind of progressive going to cash that we do, like just doing exits and not doing entries and all that, I feel I may not go to cash this time. I'll try it this time, and probably I'll see how it works out. I do not want to optimize for these like big falls, right? Like 50% falls like 2008 that come once in a decade. I want to optimize for more regular BAU, right? So in which there is a high chance for markets to like consolidate, have falls like this, but again like recovery. I'm not saying markets will recover quickly, right? But they will be there or thereabouts. So going in and out will have a lot of churn, plus all these backtests that you see for strategy, even for like NSE created indices, right? They assume that you are remaining fully invested. It's taking like these sort of cash calls is tricky also, and like I mean, you are not optimizing for having maximum time in the market. In the last in the like previous video where you had discussed these conditions, right? That okay, both should be below this for us to take these calls. Even that, like it's difficult to test that out, and the reason why I was veering towards that is, I even in that scenario I had to like maximize my time in the market. If you because markets will recover, that's for sure, right? And the further we fall, and that's the last point, the better the recovery will be. When it will be, no one knows, anybody's guess. Maybe it will take a lot of time, right? We don't know. But whenever that recovery happens, if you are waiting for a lot of time for it to like for the recovery to play out, and then you start investing again, and till then you are in cash, then like a large part of that recovery may also be missed. So I also want to stay fully invested. So this is how it is going to be. Let's see how it pans out over the next 2 days, how the market pans out. But overall, I just wanted to like have a word with all of you. Many of you may be in similar shoes, seeing a lot of falls, no hope in sight. So please let me know in the comments below how your portfolios fare today. You don't have to mention like how much percentage you fall. You can mention if you want, just to share the pain and distribute it among our viewers. And if you are taking any steps, how your asset allocation is helping, if you have gold, how that is helping, how like if you are going to cash or not, what is your overall outlook. So let's get that discussion in the comment section. And yeah, that's pretty much it for today. If you like this content, and as I always say, that our point here is not to sort of paint a rosy picture or give stock tips or anything like that, right? We are tracking this portfolio and you can see the goods and bads both. So today was probably the worst day in the history of the very short history of this portfolio, but we are shooting this video on the worst day to just share the pain and to like, I mean, to let I mean, people realize that there are both sides and you have to be like ambivalent in both the scenarios, right? Things can go a lot worse from here. We do not know that, right? So just stay invested, and if you like the content, then hit the like button as well. If you want to be part of this very frank journey in terms of journaling of these momentum portfolios, then consider subscribing to the channel as well. That's it for me, and I'll see you in the next video. Till then, let's hope the market does something better for us. See you. Bye bye.